Good morning everyone, my name is Stephanie Newton and this is my colleague Lauren Barker. I'm a case manager at Financial Services Complaints Limited, or we like to call ourselves Fiscal for short. So my role every day is to investigate complaints, and Lauren is our Early Assistance Officer. So last year we received about 1,000 complaints, but only about 180 to 200 of those had to be fully investigated. So most of the complaints we receive are actually resolved with Lauren's assistance at that early stage, which is best for everyone all round. When you have a complaint, you can come to one of the schemes, and if it's within the jurisdiction of the scheme will investigate the complaint. You can go to the Commerce Commission with the complaint as well, but the individual complaint of yourselves or your clients will be investigated by the schemes.
My name's Lauren. I'll be giving you a case study just so you have an idea about what we do and how we can help. So our case study is about George and Paul. So this complaint is about a father and son. The son, Paul, took out a loan for $2,000 and his father, George, agreed to guarantee this loan. So unfortunately, not long after the loan had commenced, Paul actually defaulted on his $180 weekly repayments. And so the lender tried to locate Paul, but when they were unable to, they turned to George, his father, for help. George, of course, he tried to find his son, but when he couldn't, he turned to us. Because the lender was coming after him as a guarantee. So in the lender's view, on the one hand, they thought they'd explained to George exactly what the guarantee was. They told him that for his income it would be quite expensive for him to have to pay these payments every week. They'd explained to George that he should probably seek some legal advice, and they'd also looked at his last 3 months of bank statements. However, in Fiscal's view, we found that the lender should never have taken George's guarantee in the first place. It was clear that George was never going to be able to provide it when he would only have $101 per month for basic necessities after he was paying the $180 weekly payments for the guarantee. So we found that the lender had actually breached a key responsible lending obligation under the CCCFA. This means that it means that lenders must ensure they undertake reasonable inquiries when they're taking out guarantees like this. So they have to be satisfied that the guarantor, so in this case George, is going to be able to comply with the guarantee without suffering substantial hardship. So the resolution that Fiscal came up with was that we wanted the lender to reimburse George's loss that was suffered as a result of the lender's actions. So under Fiscal's recommendation, the lender actually released George from the guarantee, so the complaint was all resolved. And actually they ended up reviewing their processes completely, so it's a great example of how complaints coming through like this can make great improvements in businesses. Yeah. And Stephanie's got another case study for you as well.
So this second case study shows how we like to investigate complaints to see if a resolution can be reached that both parties can live with. I'll just click through next slide. So this is a complaint from a couple we'll call them Marilyn and Peter. They were looking to buy an earthquake damaged apartment here in Christchurch, and at some point the tenants were going to have to move out of that property for the repairs to be completed, and so Marilyn and Peter wanted to see whether they would be covered under a body corporate policy attached to the apartment complex for loss of rent cover for when those tenants were going to move out. So they called the insurance broker and asked him the question, would it transfer to us as the new owners? He said he wasn't sure, so he would contact the insurance company to ask the question. The insurer came back to the broker, we'll call him Roger, and said no, it won't transfer to a new owner. Roger thought that was unusual and so went back to the insurer to question that and to clarify. However, he didn't tell Marilyn and Peter this, and so the next day they actually purchased the property, the apartment, and they purchased it at auction. So hence you can see where the dispute arose, and so they complained to us. So they said that they had missed out on, or well, that they weren't aware that they weren't going to have loss of rent cover. So under the insurance policy, the maximum amount of lost rent that could be claimed was 52 weeks, for 12 months, and at $355 rent per week, that was a total amount of about $18,500. So we looked at the complaint and we looked at the contribution from both parties in this situation. Roger knew Marilyn and Peter were relying on his advice when purchasing the apartment the next day, and he delayed in passing that information on from the insurance company that the loss of rent wouldn't transfer. However, we thought that Marilyn and Peter contributed the most to their situation. They only contacted the broker the day before, and they didn't ask for his reply before bidding at the auction. However, we looked at a way to resolve the complaint, and we suggested to the broker Roger that he might want to contribute about 25% to their loss of rent, and he said he would do that, and it was about an amount of $4,600, and both parties were happy with that outcome, and it achieved a resolution without us having to make a decision, which was really great. So I'll just pass on to Laura now to finish off quickly.
Great, so thanks for listening, everybody. These are our contact details up on the slide, but you can always visit our website. If you have any questions, please come see us. And if you do come see us, you can sign up to our consumer newsletter, and we've got brochures you can take home as well. And if you'd like to, please give us a like on Facebook, and we post about news and events and related to financial disputes.